Hello everyone, my name's Naz. I've been in the financial markets for the last 20 years. I'm not a YouTuber, so forgive me for this raw video. My purpose to help and educate. I currently help oil trading companies in Dubai with their oil futures trading. These companies typically have between 1 and 10 million US dollars in their account. For 2023, I have delivered 85% return for my oil trading clients in Dubai. And for 2024, I'm looking to deliver around 40% return for the year. Which I know is not very attractive for you because as retail traders, you want something more. You want 2x, 3x, 4x your account within a month. But for these corporate clients or these institutions who have large amounts of money, 85%, 40% is a substantial amount. A client who has a $10 million account, for example, at 85% return, they've just made 8.5 million in a year. And I'm sure they're pretty happy, and I'm sure you would as well. So let's go ahead and show you the exact strategy that I use to deliver these insane results to my clients. And I'm going to adjust that strategy to make it more suitable for you retail traders so that you can double and triple, quadruple your account within a month, within 2 months, if you wish, depending on how much risk you want to take in a more safer way. But remember, trading is not risk-free. There will always be risk. But what I want to do is introduce you a technique, a trading strategy that is much safer than what most others are showing out there, which is Forex risky day trading. Now, to begin with, you need to stop day trading if that's what you are doing. Day trading is risky, it's stupid, and it's not suitable for everybody. We all know the statistics, 87 to 90% or something like that. Day traders, retail day traders, they fail. They blow their accounts, they lose. Where's all that money going? That money is going to the profitable guys. It's going to the banks. It's going to the institutions. They are feeding off you. So first and foremost, before I continue, this is not about day trading. This is what I call swing trading, which is a slower form of trading, but fast enough to, let's say, fast enough to satisfy your appetite. And we're going to use crude oil as our instrument. If you're using Forex platforms, spread bidding platforms, CFDs, you will want to look at the pair XBRUSD or something equivalent. It might be USO USD, depending on which oil that you're using. I recommend Brent crude oil. So I'm going to jump onto my desk. Let's dive in and go through the exact strategy. I will show you step by step. I'm going to show you the calculations. I'm going to show you where my analysis and my entry points are. I'm going to show you everything that I can to help you use this strategy in a profitable way. All right, we're about to dive in and have a look at the strategy that I'm going to show you. This is going to get quite detailed. I'm going to build a spreadsheet while showing you my charts and my analysis. So stay with me. This isn't supposed to be a get rich quick. This isn't supposed to be a easy thing. Obviously, by the time I finish, it will look really easy. But while I'm actually doing this, it might look a little bit complicated. At the in my description, what I'll do is I leave a link to the spreadsheet. So if you wanted to use that, you can use it if you wish. I find it pretty useful. And again, you don't need things that are overly complicated and all that BS that people do. You know, people just make it, you know, they like to make it look like it's such a cool or difficult thing that they're so clever and those kind of stuff. To be honest, in trading, you don't really need to be that clever. You're going to see what you need more of is control in there. So, and again, what I'm going to do is I'm going to talk about this method of trading, which is more of swing trading rather than day trading. When you're doing day trading, there's less of this being used and more of the, well, where shall I go? I think it's the heart that's kind of related to emotions and all that, all that crap that you kind of face. And it obscures your judgment. Yeah. So again, swing trading gives you the time to sort of digest what's going on and absorb and think and compose yourself. So, you know, this is what I would say, guys, is a safer, slightly slower, less riskier way of doing trading. And look, you know, if it works for large companies, if it works with firms who have millions, if it works with institutions who have hundreds of millions and billions, then surely it's the better way. Yeah. Day trading, yeah, okay, get rich quick, that kind of stuff, but get poor quick as well. So just keep that in mind. All right, everyone. So I'm at my desk. Let's dive into this, into the charts, into the spreadsheet, and let's show you how I do the oil trading for my clients, which are small oil trading firms. They usually have around between 1 to 10 million in their portfolios. And we trade Brent crude oil, well, Brent crude oil futures to be precise. In your case, most likely you're going to be trading either CFDs or Forex pairs for Brent crude, which is XBRUSD, I believe, or it might be something similar to that, depending on what broker you're using. So it's a good idea to search for it, search for Brent crude oil on MetaTrader. Make sure to stay until the end, because at the end I'm going to give you some clues, some nuggets, or some ways where we can collaborate, and you can sort of get extended help from me. I'm just going to put it out there. It's not a course or anything like this. I mean, once upon a time, I used to do a lot of training and delivering courses. I'm not really interested in that at the moment. I just want to focus on the markets, and obviously trying to help out people where I can, because I know the entire world pretty much is struggling with trading, and there's so much more retail traders in the market since COVID. I mean, an influx of huge amount of money. There's a reason why these companies, Apple, Nvidia, Microsoft, Google, Facebook, there's a reason why these are trillion-dollar companies now, because there's been so much money that's just been pushed in, and all that money is coming from largely from the retail traders like yourself, and we're just feeding the entire system. But who ends up taking most of it? It's the institutions, it's the banks, it's the hedge funds, it's the mutual funds, it's all these guys who are kind of taking the money from us. So I really want to sort of try and help out the entire market of retail traders, and see what impact we can make, and maybe we can take a bit back from these institutions and banks who are playing us, really. So make sure you stay till the end, and I'll give you a few ways of where we can work together. So without further ado, let's jump into the charts and let's start building this spreadsheet. So I'm just going to give you a quick preview of what the spreadsheet is going to look like. We're going to end up with something that looks like this. And there's a lot of formulas inside the spreadsheet. And this spreadsheet, by the way, I've been building this live. So literally, my last entry was on 10th of December, and today is what, 12th of December 2024. So I'm literally building this live, and this is actually a live trade that's actually going on, which closed yesterday actually. So I'm going to update that spreadsheet. But what I want to do is I want to build this from the beginning. And again, I'll put a link in the description below if anybody wants this spreadsheet. You don't have to use this. I just find it quite useful without being overly complicated, without being too fancy and all that stuff. At the end of the day, this spreadsheet is just to record my profit and losses and show me an overview of what's going on. So what I'm going to do is I'm going to delete all these, and we're going to build this as we go along. So let's jump into the chart first, and let's understand where we're going to start. So I'm going to start in some recent time. Going back to around 29th October, end of October 2024. So I'm not going to go back in like 1930s or 1950s or whatever it is. I'm not going to go back 1, 2, 3 years and so on. I'm going to keep it quite recent. Unfortunately, there's a lot of market analysis on YouTube where people keep referring to 1930s, 1970s. It's ridiculous. I mean, again, I'm not saying they're wrong or anything like this, but the market economics have changed dramatically in recent years, especially since 2008. So I don't think it's reasonable to compare with 1930s, 1970s, 1950s, and whatnot. So let's go on this. Where I'm going to start on, as I said, on the 29th of October. I'm not going to go too far back. If I just browse on my chart, you'll see I do have more trading that was going on. Each of these trend lines represent a place where I actually did a trade. That's how I keep track on my charts. So if we begin right here, is where I had my first trade for this sort of for this tutorial of the strategy. Yeah, so we'll start right here where we had a buy trade on crude oil, which was at around 71.8. When it broke out of this trend line, which I had, I knew that I had to go in, and it gave me plenty of time to get into this trade. So I did a buy at 71, and we're on the 1 hour time frame here. So this one actually had quite a long target. So this one's target is actually is actually 86. But it will take quite a while. I'm not saying it's going to get to 86 anytime soon. In fact, we're not even nowhere near 86 at the moment, 1.5 months on. But this one, I'm setting a long target. And again, just to recap, we're not doing day trading. We're not doing high risk stuff. We're not doing high exposure stuff. We're not doing get rich quick stuff. This is known as swing trading, where we wait for a good few days or a good few weeks until our trades mature. And what you will find is we do some trades that are quite big and take a while, a good few weeks. And in between, we're going to do some trades that are small and give us quicker profits. Again, it's not about finding trades or making trades happen. It's about the trades presenting themselves to us. And I'm going to show you how that happens. So I'm going to do a buy trade on oil. Well, actually, we did, and we've done it already. And we are still holding that buy position, by the way. So I'm going to do a buy position at 71.8 with a target of 86 on this. So I'm going to jump over to my spreadsheet and I'm going to record that. So for argument's sake, for making this suitable for retail traders, I'm not going to do like a $1 million portfolio. I'm just going to do a $1,000 portfolio. Now, the risk factor, I've put 10%. What I mean by risk factor is how much risk I'm going to take on one trade. Now, I know some people are going to go crazy about this and like, whoa, Naz, 10%. What the hell are you recommending? Look, guys, 1% risk, 2% risk, this kind of stuff you hear all the time. It's total BS. It doesn't work. Nobody does 1%, 2% risk. I'm sorry to say that. It's the larger firms, especially when you go into the millions. That's when you come down to 1%, 2% risk. Maybe you might go as much as a 5% risk on a trade. Or if you're, hedge funds or whatever it is, and you've got hundreds of millions or going to billions, you're going to go way less than that, less than 0.5% risk on a single trade. But for us retail traders who've got $1,000 account, you're not going to do 1% risk. It's ridiculous. And that is, again, going back to what I was saying at the beginning, a huge reason why retail traders fail is because the small accounts have very little impact on our psychology, and it doesn't excite us to hold on to our profits or go through all that effort. So can you imagine a 1% risk? Okay, 1% of 10,000. What is that? $10? So I'm going to take a $10 risk on a trade to make, if I'm doing a 3-to-1 risk reward, to make what, $30. So I'm going to go through that headache, that emotional scenario just to make $30. I'm not happy about that. I'm not going to hold on to that. I'm going to risk all that. Do you see? And then that turns into a snowball effect, and that's where people really screw up. So let's be a little bit more realistic in terms of what retail traders actually do on small accounts. And I'm going to go for something conservative, which is a 10% risk, which is I'm willing to lose $100 on that $1,000 account on this trade because I am doing trading very selectively. I'm not taking a ridiculous risk in terms of just gambling and doing random trades. And my risk to reward will ideally be around 3-to-1. Sometimes I might do something that's less than 3-to-1, and I'll have a good reason for that. And again, I'm going to build this, you might call this a financial model. I'm going to build that as we go along with formulas, and then we can change these numbers, the 1,000 to 10,000, a million. We can change the 10% to 5%, 2%, 20%, and we'll see what actually happens to our return. So to begin with, on the 30th of October, we had a buy trade around 71.8, taking it to 86. Stop loss is very clear, which is right at the bottom here. Again, I'm not going to keep it right on the edge of it. Again, you've got to give a little bit of room. Obviously, not ridiculously amount of room that, hold on a minute, the trade is actually totally wrong. You shouldn't be in that position anyway. But just a little bit of room just to allow for a little bit of fluctuation, just in case my brokers are, let's say watching, just in case my brokers are trying to, take me out with what the market nowadays calls liquidity grab or whatever it is. So let's plug those numbers in. I've got some of these numbers already. As you can see, we actually did open at 71.25, but because I'm doing the retrospectively, I cannot get these numbers exactly precise looking at this chart again. So I'm just going to put in 71.8, which is a higher price. So I'm not trying to show you unrealistic, or I'm not trying to show you, hey, look, we've got the perfect timing and so on. Stop loss around here, 70.5. Yep, makes sense. And our target is 86. Stop loss 7.5, and our target is 86. I've got 80 here, which is where I'm going to sort of check what's going on, because Around 80 is a critical kind of level. 78 to 80 for Brent crude oil is a critical kind of level. It will take a lot of effort and buying power to break through that. But ideally, we're going to 86. But what you'll find is by the time I finish that spreadsheet, whether it's 80 or 86, it doesn't really matter, because you'll see we're going to make profit on the way before it even gets that high. Yeah. So for argument's sake, I'll put 86, and we've got a beautiful risk to reward, 10 to 1. Potential loss $100 on $1,000. That's 10%. Makes sense. And my potential reward is 10 times more. Okay, fine. Let's go on. So now this position is going to stay open for a while because it's not going to mature for a while. Yeah. So I'm writing here, holding this buy position and letting this run. So keep in mind, we've got that position on our hand and it stays on our hand. Let's see what happens next. Do we have any other potential trade come up? So I'm just going to browse along, and I see there was a trade here that we did. Yeah. So again, I'm not going to claim that we catch this right at the bottom. That's just unrealistic. We usually catch it just a little bit later, so around 74. And obviously the target for that was just the top of that. Again, we didn't go right to the peak, right to the top. No, we did not. We did not do that. So again, from 74 closing around 76. So we've got buy trade from 74 closing around 76. And that was on, what's that? 6th of November. So you got 6, 11. That's a buy trade. Hold on, I think there's a formula there. I'll just use this formula. And that's a buy trade opening at 74. Target is 76. What's my stop loss on this? It's quite clearly it's down here. So again, I'll just push it a little bit lower because again, I don't want to be unrealistic and showing you guys, hey, look, you can do this micro timing, because to be honest, you cannot do this micro timing. Unless, of course, sorry, I'm going to stop there. This micro timed trades and stuff, usually there is this technique that's going around, ICT, SMC, smart money concepts, and so forth. There is a lot of truth in that, and it does work. I'm not that kind of trader. This is for day trading, and I find that extremely high risk. You've got to be really good, really on the ball, really fast thinker, and so forth. So that's not the sort of that stuff that I do. I do incorporate some of those techniques in my analysis and how I forecast which way the market is going to go. But that's a different matter. Here we're talking about the trading strategy in terms of how we're going to generate profit and be profitable, rather than getting all our forecasts correct and then ending up being a failed trader because we get all our calculations wrong. So our stop loss, let's just say 73.5. Okay, so I'm just going to copy all these formulas over here, and I'm going to take that yellow line off. I highlighted the other one yellow because just to remind me that that's an active live position that's open. So we've got a risk reward of 4 to 1. Position size is showing wrong because this is the wrong number. That should be based on this. Yep, I'll get that. Okay, potential loss is 100 because my balance is 1,000. And okay, all right, my balance is 1,000. Now you might be thinking, hey, Nance, you opened at 71.8. Now you're opening at 74. You've got some profit. So your balance is higher. That's fine, but I'm not using a floating balance. I'm using what's been banked in the account. So I'm not going to base it on, okay, I've made a $200 profit on this already, so my balance is 1,200. No, I'm just going to keep it simplified. Again, you can leverage yourself. You can start using your floating balance and start trading off that and grow your account exponentially. It's high risk, guys. And as I said from the beginning, I'm not doing high risk stuff here. I'm just doing stuff that is sensible with a relatively low risk, and the whole idea is to become profitable. And again, if I was doing this kind of crazy stuff with my clients, which are the oil trading companies, and they've got a portfolio of, I don't know, 87 million, they're going to be pretty pissed at me if I'm taking these unreasonable risks. So that's just not going to work. So anyways, I'm allowed a position size of 2 lots. Maximum loss is 100, and I've got a potential profit of 400. All right, okay, so let's see what happened to that trade. We can see that spiked up, hit the target, and that was it. So yeah, so we hit target on that, and that was a profit. Okay, so our profit P&L was 4 plus 400 on this. Our new balance, again, that's showing wrong. That should be equals that plus the new balance. Our new balance is 1400. Okay, so that worked out well. Let's move on. Let's see what our next trade is. I'll just save this file before I lose it. So you see this trend line here? Yeah. So we had a sell off here. But you know what? I'll be honest, I did not do the sell here. I couldn't see it. By the time it came for a retest, I saw the sell opportunity. So that only happened around here. So I'm going to throw in that sell. But just before I do that, I can see I've got another trade coming up that I did, which was when it crossed over this trend line. And we've got a really small trade over here. So as I was saying before, it's not just about waiting weeks and weeks for a trade to materialize and make profit. We're going to do smaller trades along the way as and when it presents itself. So So moving on, we've got a sell trade right here on 7th, on the 7th of November. And again, I'm not going to claim that, oh, we did the sell right here on the peak. No way, it doesn't really happen. So usually it happens just a little bit off. So around 76. Yeah. So again, I didn't do the sell trade there. I couldn't see it. I didn't do the sell trade here. I couldn't see it. By the time it got here, that's when I saw it. You see, that was a retest of this trend line, and it was very clear that there's a sell very likely coming, and I'll have a stop loss above that last high over here. So okay, so we've got a sell around. I'm not going to choose 76. I'll choose something lower. Let's just say 75.8. 75.8 with a stop loss of 76.7. 75.8 with a stop loss of 76.7, and that was oh, that's a formula there. I don't need to type that. And what date was that? That was on 7th. 7 November 2024. And the target here is down to this key support level that I have. No, I wasn't trying to go any lower. Although the price did spike lower, I wasn't trying to go any lower. Just down here, I'm perfectly satisfied. And again, my target was around 71.8. So let's put that in. My target is 71.8. What I'm going to do is I'm just going to drag this so that my formulas stretch out. Don't know why I keep saying sell. All right, ignore all these cells that it says here, because it's not all cells. And I'm going to copy these and drag them out. There we are. And I don't need this word profit here. Okay, there we are. So we've got risk reward of 4 to 1. Very nice. The position size we're allowed is 1.6. And again, this position size is calculated based on our account. Let me just make sure it's using the right number. Yep, 1400 our account, using the 10% risk and using the distance to our stop loss. Okay, so I will lose $140 or make 622 on this trade by only doing 1.6. So again, I'm not allowed to do more than this. I got to stick to these rules. Whatever my calculation shows on a 10% risk, I got to go with those lots. So what happened to that trade? This trade was a profit. And again, you might be thinking, you could have had a lot more profit. I don't care. It doesn't matter. You know, this was your target. Take the profit and just leave. Don't try and stay longer. Don't try and think, okay, let's milk it out more, because it might not happen. It might just reverse and you just miss out or lose out or whatever it is. Yeah. So that was a profit. Oh, that was bad typing. That was a profit. Oh, I don't like these decimals. There's no need. We'll just go for whole numbers, shall we? I'm just going to drag that out so that all the decimals are updated. Okay, cool. Now look what's happened. This is an interesting thing. You see, we've got this buy position, and now we did an almost equally big sell position in terms of how far it's dropped. So look at this. Look at this. We've got a buy position holding from here, and we did a sell from here. So you might be thinking, hey, Naz, you lost out the profit on the buy. No, I didn't. I didn't lose it out. I'm still holding that buy position because that is going to 80.86. What I did was I locked in the profit that this buy generated by doing a sell and then I banked that profit, and now I'm back to square one. And now technically, if I wanted, I could open another buy position because I've got extra capital now, which is exactly what we do. And this is part of the strategy, guys, which is when there are, if I'm in a long-term or a medium-term buy position, the sells that I do are wonderful opportunities for me to hedge or protect my buy positions. And it allows me to bank the profits on my buy positions without me closing my buy position. Do you see? So my buy position here, it still stays. Okay, my profit and loss is probably back down to zero. I don't care because on this one, I just banked a lot of the profit and I'm perfectly happy with that. And now I've got an opportunity to go buy again on this trade. I've got an opportunity to buy again on this trade. So I've got to buy here. Now I'm going to get another buy. Now I'm going to have two buys, which I'm going to run for quite a while. Yeah. So let's throw that in. But just before that, I want to throw in that there was a small sell here, which became quite obvious. So I'm going to do that trade. Now this sell trade is independent of the sell trade we did here. It's got nothing to do with this sell trade. And again, you've got to be structured and not mix things up, guys. So this is independent and it's going to have its own independent target. Just because the target for this sell was down to 71.8, it doesn't mean this guy is going to have the same target. This guy actually had a target of roughly around here, which was around 71.5-ish, I do recall. Yeah. So this one's got a target of 71.5. You might be thinking, then why didn't you extend your target for this big sell down to 71.5? No, I set it already. I'm comfortable with taking it there. I don't want to wait right until the end if I for my targets to be hit. Maybe this small sell didn't work and maybe it ended up being a loss. So in which case, it will only be this trade that's affected, not my bigger trade because I banked that. You see. So I'm going to throw that in, and I do recall I actually catch this. This was on a 5-minute time frame, by the way, on a 5-minute time frame. So I was able to time it quite meticulously, and it was around not at the top of these candles tails and stuff. It was usually somewhere around the body, so around 72.8, and it was taking it down to 71.5. So I'm going to throw that in 72.8. 72.8, taking it down to 71.5. And you're probably getting the picture. The stop loss has become quite obvious to me. So here it's 71. Let's just make it a little bit higher for the sake of our calculation. 73.15. 73.15. What date was that? That was, my friends, on 12th of November. Hey, look, I've just gone for a quick break and I was thinking, I have an idea and I'm just wondering if everybody would like to see this, and just give me a quick comment just to let me know if you want me to do something like this. I'm happy to do a vlog for one full month of what I'm doing on trading. And again, these will be raw videos. So I'd be happy to sort of do a video every day of me reflecting on the market and working out which way the markets are likely to go and what trades I'd be looking at. But again, be careful, don't copy those trades on those videos because obviously by the time you see the videos, it's already too late. Yeah. So yeah, I do that for 30 days and let's see what we can do with the account. Let's see if we can double the account, and I'll do it with $1,000 account so that it relates to a lot of retail traders. There's no point in me doing something like a 100,000 account because then you can't relate to that. And doing the 100,000, trading with a 100,000 account and trading with a $1,000 account is a huge difference, guys. A huge difference in terms of how much risk you're willing to take. Huge difference in terms of how much room you have for movement, and a few other factors. So yeah, I'll do it with a $1,000 account, real live trading on my account for a month. Let's see how it goes. And then I'll show you how it actually works out. I don't know. It might be profitable, might not be profitable. Maybe I'll be doing this at such a bad time where the markets will going crazy, which happens. There are times when in the market I have no idea what the hell is going on. There'll be periods of 2, 3 weeks, sometimes 4, 5, 6, up to 8 weeks where I can't tell what's happening in the markets, and I just don't trade. Again, when I'm working with my clients, I simply don't give them any trades, and they'd be calling me every couple of days saying, "Hey Naz, what's going on? We need a trade." And my answer is very simple, which is, hey, look, I can't force a trade to happen. If I can't see it in the market, if I can't find an opportunity, then we just got to sit it out and wait. And often that is the better thing to do. So just drop me a quick comment below just to let me know if you want me to do it. If I've got enough sort of support for this, then I'll do it. Where were we now? Okay, we were working on this really small sell trade here. And just to recap, we've got this buy trade that we're holding on, and we've got this sell trade that we're actually working on. Well, actually, it got closed here at 71.8. So that's all good. We've got a new sell option to come here. I'm just looking at our spreadsheet. This new sell opportunity gave us a risk reward of 3 to 7 to 1, which is nice. And it allows us to do almost a 6-lot position. And, again, these aren't extortionately huge. You'll have these day traders who work on really small time frames, 1 minute, 5 minute and stuff, and they do huge position size. It's just, guys, I find it scary. You see, I find it scary. Unless my account is of a substantial size, I find it very uncomfortable to do these huge position sizes of 50, 100, 150 lots. Anyhow, coming back to this, and my potential loss is 200, which is 10% of the 2,000 that my account size is on at the moment, and my potential profit is 751. So anyhow, so this trade quite clearly was profitable. Did it go to 171.5? Yes, it did. Now the interesting thing is, I actually had an order placed to catch this at 71.5 with a stop loss down here. So this little freak out there, oh, it was beautiful. Unexpected, but beautiful. I didn't expect to suddenly just freak out like this and then jump right back up. Because again, I cannot tell exactly how the market is going to move. I simply try to forecast where the market's likely to go, and how it's going to go there, that's a bit difficult to work out. But anyhow, I had an order here at 71.5. Once this one closed, buy again, because we've got a retest of this low. I'd like to buy a new position because I have banked my profit on the way down. So that will be for our next trade. So this one was a profit. Now our next trade, again, that was on which day? It was on that falling hour, by the way. 71.5, that was on 13th. On the 13th of 11, 13th of November 24, and that was a buy. I don't have to worry about it. It's going to do it automatically for me at 71.5. Now, here's the interesting thing is, I'm not going to take this trade to 86 like the other one. This one, I'm going to hold until 86. Probably consider closing around 80. This one is a second trade that I got an opportunity for. I'm going to hold it until 78. That's as far as I'm going. So again, what I want to do is I want to incrementally bank my profits on the way. I don't want to keep everything until the last minute. So my target for this one is actually only 78. So you probably worked out I'm going to be holding this for a good few days, maybe a few weeks. And my stop loss is not the bottom of this. My stop loss, I'm going to go to the bottom of this, because that was my my buying decision was based on a retest of this level. So I'm going to stay on my stop loss around here, which is around 70.6. I could choose the same stop loss as before, which was 7.5. I don't mind. Let's just go for it, because I know I'm going to have a substantial risk reward. Yeah. So my risk reward is 6.5, which is really good. And I'm only allowed a position size of 2.8. Why? Because my stop loss is quite big, from 71.5 to 70.5. That's quite a wide stop loss, guys. Quite a wide stop loss, full $1. But again, I'm trying to catch a lot of dollars here. So, I don't mind. I mean, if I make it 70.6, it's going to let me do a lot more positions. Yeah. I can do 3 full positions, but I'm comfortable with this. So my potential loss is only 277 with a substantial potential profit. So now I'm going to highlight that yellow as well, because that's a position that I am holding. Okay, cool. Let's keep going. What trades do we have next? As we browse, we see it came for another retest of that low. Now that came with its own independent trading opportunity, right? So I actually did go for a buy here. But the buy here was not right on this tip. No. I wasn't able to see that. When that pushed up and came for that little retest here, that's when I realized, hey, I've got another buy opportunity here. But this buy opportunity is going to have a small target. This buy opportunity actually has a target of slightly above here, which was around 73.8 stroke 74. Yeah, that's as high as high as I was going with this one. So we've got another buy opportunity. Which is around here. So again, 71.25 around there, 71.25. Stop loss. Again, this was an independent opportunity. It's got nothing to do with this or this, and I'm not going for a large catch. I'm going for a small catch. I'm just going to stop this out if it gets here. Yeah, so which is 70.7-ish. So I'm buying at around 71.25. 71.25. 70.7 is my stop loss, and my target, I was going to that. You see, there's like a resistance here. I was only going up to here, which is all right. I'm not going to say it was right at the tip. Let's just say 73.7. Yeah, 73.7. It's difficult for me to remember the exact numbers that I was doing, guys. On the actual trades. Besides, I've got a very nice risk reward here. If I wanted, I could have extended my stop loss a bit more. I could have gone to 70.6. I'll still have a nice risk reward at 3.8, yeah, which I'm comfortable with. But I was pretty comfortable with this stop loss anyhow, because again, it's an independent trade based on the price movement that I had here, and I realized I've got a nice buy opportunity, and I'm going to take this to the top of that. So here we are, and as you can see, this was a profitable trade. So this trade, what was the date on that? That was on the 18th of 11. 18th of November 2024. Now notice the time differences, guys. Look, we had one trade on the 30th. Our next trade came on the 6th of November. So that was what, 7 days later. Then we had another trade come 1 day later. Then we had another trade come 5 days later. Another trade come 1 day later. Another trade come 5 days later. So you see, we're not trading aggressively. We're not going crazy every day. We're not sitting on the computer all day. We're not driving ourselves mad. We're not hyper focusing. We're just waiting for the opportunities to come and present themselves. When we see them and we recognize using our analysis techniques, which is a different topic. It's not part of this discussion here. When our analysis technique shows us that there's a trade opportunity, we take the trade. So again, we're being quite chilled, and we're taking it easy. And this is maybe total of maybe 20, 30, 40 minutes of trading a day, and that's it. And then you just sit back, get on with your life, get on with your job if you have another job, and just go and do something, and just check the markets later on in the evening just to see if something moved quickly, or reassess. So here we are. So we have that buy opportunity. It was a success. So let's go. So we've got the trade for this. We've got the trade for this. I can see there was a trade coming up later on. Okay. All right. So there was an interesting tiny little trade there, actually. So I'm not going to throw that in, because then I'm going to have to zoom in, and then I'm going to lose track and so forth. So I'm going to ignore this trade that we did for the purpose of this demonstration. But I can see there's a trend line here and a trend line here. So I had a lovely, lovely trade come up. Now you might be thinking, okay, I've got a double trade come here because of my two trend lines here. This was actually one single trade, by the way. It wasn't double trade. I didn't do a sell for this trend line and another sell for this trend line, because they were both pointing to the same thing with the same target. My target was around here on this sell, yeah, around 71.8. And I actually still remember this, because it never actually hit the target, and I didn't actually gain anything, unfortunately. If I just pull my chart along, you'll see that it never actually did. It didn't even reach it, which I was quite disappointed with, because I actually thought that oil will come and touch this level again and then head off upwards. But it never did. And I was waiting to do another buy here at 71.8, which never actually came, actually. So, that was unfortunate, because this sideways movement, that confused the hell out of me. You can see these tiny little lines here, again, on the 5-minute scale. I was doing a few small trades there. And in fact, I want to put this one in actually, because I remember this as well. That got stopped out. So this position unfortunately failed, this sell. And there was a sell here which failed. So I'm going to throw those in because I want my special to look realistic. It's not all about just, oh, I made profit and everything. Yeah. So again, we've got a sell opportunity here. So again, I did not get in right at the top. That was way too difficult. By the time I got in, it was somewhere around here. So let's just say 75. My target was 71.8. Sell at 75. My target was 71.8. Stop loss, again, you probably figured out how I do my stop losses, which is just marginally above the last high or the last low. So again, about 75.6. I probably would have stretched it a little bit more to say 75.7. 75.7. That's a sell. What was the date on that? The date on that was 25th. 25th, 11/24. Why are my dates showing different each time? 13, 11, 24. That's very strange. Okay, never mind. So nice risk reward here. I would have made a nice healthy profit. Sorry, hold on. I didn't close that, did I? That was a profit. Okay, there we are. Yeah, nice healthy profit I would have had. Substantial. You know, I had a position size of 5 lots. But sadly, it never actually came. But whilst I was holding that position, I had a sell trade come up here. I had a few more trades come up here. They're really small, and I don't want to really throw this into this calculation at the moment. There was a buy trade there, there was a buy trade there, there was a buy trade there, there was a sell trade there. So I don't want to throw this in the calculations. I want to have to go into 5 minute, and then you know, it's easy to lose track. Yeah. So for this overview, I want to just kind of stay on this time frame and show you all the stuff that I had. But as you can see, this is not manipulated. This is just lines sitting there already from the past. Where are we? 29th November. Yeah. So while I was doing that sell, I had this sell going on, and I want to actually throw that into the calculations, as I said, because this one got stopped out because I didn't expect that spike that suddenly came. Again, it was just some small bits of news that spiked it and then dropped it. So overall, I was correct, but unfortunately, the news kind of screwed me up there. So I want to throw that trade in as well, which came on the 26th. So I'm still running this. Then on the 26th, what the hell? I don't like it when everything just starts looking different. 26, 11, 24. On the 26th, so that was a sell around 73.6, and the target was 72.5. 73.6, target was 72.5. So you can see it's a tiny trade, a tiny little move, because obviously this was on a 5-minute scale. And my stop loss, obviously, as you figured how I do it, is just marginally above the last high, which was around 73.9. Cool. So we had a risk reward of 327, position size 10, nice and big. It's tiny little trade. But unfortunately, this one was a loss. So my account goes down by $325. That's okay. I've had a nice winning streak. Now, with that said, what happened is this sell that I did here never actually reached. I mean, in hindsight, I remember when it started moving, I thought, oh, damn it. I should have just closed it manually rather than waiting for it to exactly touch my level, because this sideways movement it was confusing the market, and I should have just kind of let it go and closed it. So then it kind of started to spike up, and that was it. I missed out. So now you might be thinking, hey, Nance, look, it didn't hit your stop loss. But you see, it didn't hit my stop loss, but I've got this trend line here, which is telling you I actually was looking on the buy side. As soon as it crossed above, I was looking on the buy side. So we have another trade on the buy side, which actually went wrong. So unfortunately, there were a few that went wrong. So that was a loss. And now we've got another trade come up, which was here. I went on the buy side, and now my target for that was actually up at 76. Yeah. And I remember that because simply because it didn't work, it failed miserably. And I was like, damn it, what the hell? I didn't expect this. So here we are buying it on 3rd of December at 73.2. 3rd of December at 73.2. Target is 76. I remember that. Stop loss is down here. My last low there, which is around, let's just say, 71.9. Okay, so I've got a risk reward of 2.2. Again, it's not the ideal 3, but I didn't mind. I didn't mind because I've already got 2 buy positions and I'm actually carrying a floating profit on that. I didn't mind. I've banked quite a bit already, so I was okay. And I was feeling fairly confident because it came from a place which was so close to my key support level around here. So I was pretty confident on this trade. Being totally honest here. But unfortunately, what happened? The price started to pull down or push down and it breached my stop loss. So that was also a loss. Again, as you can see, I've got another trade coming up here, which was a buy trade. And I did have a few small trades along the way. Again, I don't want to zoom in and look into those. So I'm going to leave those out for now. So, but again, just keep in mind, these small trades do affect the end result in terms of how many times, if we did a 2x, 3x, or a 4x on our account, how many times it's grown, have we doubled it. These small trades do affect it. And you can probably tell from these lines that most of those were actually profitable. But I just don't want to go in and do these calculations for this purpose of showing you the strategy. So we're going to take a loss on this trade. And what was our next opportunity? So our next opportunity was actually down here. It was a tiny one. I remember kind of watching the market. I was kind of surprised that it actually came down to this level to retest again. I was very surprised. Okay, I didn't expect that. I thought around here it would stop and go, but it didn't. Okay, but as I was watching this closely, I kind of realized, okay, that's it. This is bottoming out. It's going back up. So my entry was actually here, believe it or not. It wasn't actually on the other side of on this trend line. My entry was here. So we're going to go on the buy side on this. So here we are. I'll choose something a little higher. I don't want to say, oh, I've got it right at the bottom. Although I did because I was on a really small time frame. But anyways, for this purpose, I'll go something higher, 71.6 on 9th of December. So 9th of December, 71.6. Well, and the target for this, again, we're going up to, well, I had 2 level targets. Well, there was one here and there was one here. I wasn't sure where it's going to end in this scenario, actually. I know overall I'm going back to the 76 level, the 78 level, and so forth. But for the purpose of this trade, I didn't want to carry it all the way. I just wanted to close it out somewhere around 74 to 76. So for the purpose of this, I'll just say the target was 74. Stop loss. Again, this is an independent trade to this that we did, an independent trade to that we did. Okay, so this had its own stop loss, which was around 71.15. 71.15. A risk reward of 5 to 1. We can do 5 lots. Lovely. And let's see what's happened. So this is coming up to the current time frame now. We're on the 9th, so 3 days before this video. So interesting thing is, and you notice after that, there was no trade. I couldn't see any trade after this, guys. It's been a good few days, actually. The market, you see that sideways movement? Oh, boy. That was confusing the hell out of me. I mean, if I just do a quick Fibonacci on this, you'll see running up to the 61% pullback between 50 and 61. Oh, my God. Confusion on confusion. And, you just got to hold on tight. You just don't do nothing. And I'll admit, it was difficult for me not to do nothing because it's around some key Fibonacci levels, which do actually work. Again, a lot of it is based on mathematics and human behavior. do actually work, and it's just making me doubt and ponder, hey, should I hedge my positions, because I've got buy positions. I've got 3 buy positions now, right? So I've got 2 buy positions that I'm running, and I've got this new buy positions. So you can imagine how tense, how worried, how much suspense there is, how much anxiety you're starting to feel. You see, but truth be told, we actually held this, and literally last night this actually closed at 74. So here we are this morning. Well, I mean, this is Dubai time morning, so Eastern time is about 3 o'clock in the morning, and what's that in UK? I think what, 8, 9 o'clock right now. So here we are at 74, and this trade has matured, and I'm actually looking at a new trade right now as I make this video. In fact, I was looking at this early in the morning about an hour ago. I'm looking at a potential sell here, but I'm just waiting for a little bit more clarification on my analysis to show me that it's time to do the sell. So it's not quite time to do the sell yet. I'm looking for a sell, most probably going to bring it back down to around 72, but I need some confirmation before I can say yes, it is a sell. Yeah. So this trade, we are taking it to 74, and that is a profit trade. Lovely, lovely. So our account balance is at 4,000. So what I'll do is, for the purpose of this strategy demonstration, I'm going to close these 2 running trades at 74, so we can see how much we would have made in this time. Yeah. So I'm going to change that target to 74 because we're closing it. And I'm going to change this one's target to 74 because we're closing it now. And then I can claim this a profit. I can claim this a profit. And I have just closed my books. Yeah, so I can take this highlight off. I don't need this highlight no more. And I've literally just closed my books at 74. Good profit run, few losses. Now let me just do my calculations to show it's not L9, it's L16. To show some key statistics of ours. I can delete all these because we've just closed the books now. And I don't like my spreadsheets looking funny. All right, so our total profit, well, fine, our total profit is that. Our balance on the account is 6,770. Total profit 5,770. 6,730 is a balance because we started off with 1,000. And another thing, guys, I do every Monday, I do send out a report to my corporate clients in terms of my overall sort of expectation on the markets for the coming week or for the coming couple of weeks. I don't mind sharing it with everyone. So just jump over to my website. Just head over to where it says sign up for the newsletter, and just drop your email and your name. And every time I am posting this report, and again, the report is largely technical analysis based. And what I do is I kind of draw the chart, what I'm sort of expecting. Obviously, I don't mention the numbers and so forth, because that's where my clients will have to pay their fee for that. But I kind of draw on the chart what I'm sort of expecting into a trade, and it would give you a feel for what the markets could be doing. Yeah, if you want that weekly report every Monday coming over to you by email, just head over to my website. I'll put a link in the description as well, and there's a sign up for the newsletter. Okay, so got interrupted again. Phone ran out of memory. I do apologize. As I said, I'm not a YouTube guy. Kind of starting out, trying to share the knowledge and the experience that I have. So yeah. Again, this video is pretty raw. It's exactly as it is and exactly as you see. So I just wanted to quickly finish off because we just got to the end and my phone kind of died on me. So as I was saying, we'll just close our books now at 74. I can see that the oil price is still creeping up a little bit. But that's okay. We'll close the books there. We've actually got these live positions still running. We've got 2 of those live positions still running, and they will keep running because our targets are 78 and 80 to 86 on 2 of those. I'm actually looking at literally, like, as of now, I'm actually looking at a potential sell opportunity. I can't quite see it yet using my techniques. I'm looking at this trend line here to see if that will be breached. If that is breached, then I might see something like, I don't know, I'm just speculating here. It's way too early But just to show you what I'm kind of looking for at the moment is, what I'll do is I'll just do a quick screen grab of this. If it will load. Yeah, so what I'm trying to see is if it will breach this trend line and go hyperbolic for a short while and then kind of drop back. Yeah, so when it drops back, I'd be looking for any kind of retest here, and then that will be my cue to go for a sell. So again, my techniques are very different to what most people probably are used to. And again, these are techniques that I've developed over the years, over the last 20 years, following the financial markets and so forth. These techniques are ideally suited to swing trading. And again, as you've seen on the spreadsheet, guys, we weren't trading aggressively. Let's have a quick look at the spreadsheet and reflect on this while I was just waiting for my phone memory to clear. I've just tidied up the spreadsheet. So as you can see, how many trades did we do in total? We've only done 10 trades in the space of 48 days. Yeah, so we weren't going crazy. And let's see the gap between these trades. This 1 day gap, 5 day gap, 1 day gap, 5 day gap. Here we've got a 7 day gap, here we've got a 1 day gap. Here we've got another 7 day gaps, 6 day gap. And it's okay, you got to live. Yeah. So, and again, you're making substantial profit here. How are you not making substantial profit? Look at this. Look what we have achieved in 48 days. We have more than double, triple, quintupled, if that's even a word, our account, 6.5x, guys. So using $1,000 account, we've just made $5,549 in 48 days. So this is pretty remarkable, and I think for you retail traders, this will be quite suitable. As you can imagine, for multi-million-dollar accounts, you ain't gonna do that. Yeah, I mean, yeah, you'll be thinking rich, but the risk appetite that you have goes way down when your account sizes are much bigger, and that's where you get to the 1% risk and even less. Yeah. So what I want to do is I want to manipulate this model. So this is essentially a model, right? Because I've got formulas everywhere. And if I change some of these key figures, I can see what is likely to happen to my account if I was to use different values. So let's have a look what would happen. So suppose we had a $10,000 account. In 48 days, well, in 48 days, we would have turned that into $55,000 profit in 48 days, which is remarkable. But again, there's an element of psychology here because there's a 10% risk that we're taking here. So each trade is losing 10%. So on a $10,000 account, do you have the stomach to digest, to accept $1,000 loss on each trade or more? I mean, here, for example, you've got a $42,000 account here. Are you patient enough? Are you strong enough? Are you confident enough to take a hit of $4,000 on a $42,000 account to make a gain of $22,000? So not everybody has that risk appetite. Do you see? So as your account size increases, you probably will reduce the amount of risk you're willing to take. So let's go down to 5% risk and see what you would have done. So on a $10,000 account, you probably would have done realistically $18,000 profit in 48 days, which is 2.8x, which again is still remarkable. You've tripled your account in 48 days, which is absolutely incredible. Yeah. And again, you can play around with these numbers. What happens if you did a 1% risk? Yeah. So look at this. On a 1% risk, your profit is only $2,500 on a $10,000 account, and this doesn't even make sense anymore. Yeah. So a 1.3x in 48 days, you're not going to be happy with that. You're going to be like, what the hell, all that effort, the emotional roller coaster you probably had to go through to do these 10 trades is just not worth this. So you probably want to put your risk up a little bit more and work out, okay, what am I satisfied with in terms of return? Yeah. So let's go back down to a $10,000 account on our 10% risk. What would have happened if we took 20% risk? And I know there's a lot of retail traders who have the balls to do stuff like that, which is on each trade they're comfortable taking 20% risk. On $1,000, I'm happy to lose $200 on each trade, 20%. Do you see? And look what happens. You can 20x, 23x your account if you take that additional risk using this strategy that I've just shown you. Yeah. And you'll notice that in the strategy, I did not take any abnormal risk. I did not do anything excessively dramatic or crazy or overloading on positions or overloading on the number of lots that I'm doing. Nothing at all. I've just taken it fairly easy. Yeah. So yeah, if you wanted to. But now let's look at the scenario that everybody seems to be pitching, which is do 1% risk, do 2% risk. Let's see what happens on a $10,000 account. What happens if you have a 1% risk? You're wasting your freaking time. You're not going to get nowhere. I'm sorry, but yeah, people talk about and they write about, hey, let's start with $1,000, take $20 profit, take $15 profit, work your ass off for months and months and months. Then eventually it will start growing exponentially. That is true, mathematically true, but put that together with your patience, your emotions, your desires, your expectations. Mate, that isn't happening. Yeah, you're not getting nowhere with this. So 1% risk in reality doesn't actually work. Look, in 48 days, you're going to make $254 profit in 48 days. Are you telling me you're going to be happy with that? I'm very unlikely. I'm certainly not going to be happy. I'd be pretty pissed, actually. Yeah, I would want to see it at least double in 48 days. Do you see? So this is the key reason why people actually fail. These risk factors are actually ridiculously low. So that's it, guys. Just to sum it all up, this is the trading strategy. And just to recap, I'm going to quickly just zoom out and show you what we did. I can't even fit it in here. Now I can fit it in. What we did was we did a buy here and we held it. We did another buy here and we held it. And in between, we did multiple sell opportunities to lock in the profit. We had a few small buy opportunities that gave us additional profit as well. And we just kept going until right at the end, we decided, okay, we're closing our books, and we closed that buy. We closed that buy again, simply because the end of this tutorial, and we closed our books at 74. So we were carrying 2 trades all the way along, which enabled us to do other sell trades to lock in profit along the way. So that's how the strategy works, guys. And it works incredibly well for my corporate clients who have multi-million-dollar accounts. And I'm pretty sure it will work with your smaller accounts easily. Okay, so that's only one piece of the puzzle when you are trading the markets. There's actually more to it. Us traditional sort of traders in the markets for years and years, we have what we call the 3 M's, which is mind, money, and method. So what I've shown you is a part of what you might call the money aspect, which is, okay, if I can work out which way the market is going, then how do I actually trade over my account so that I am profitable and I'm making good progress on this? So I've shown you a nice little strategy where you focus on a large move. You might be looking at that on the H4 or the H1. And then within that large move where you're sitting on that trade, you're trying to focus on the smaller moves along the way, especially the sells, for example. So if your large move is a buy, then especially the sells, which keep allowing you to lock in profits as the asset is moving, or in this case, oil is moving. So it's really good technique. It works really well. If you can pull it off, it just takes a little bit of patience. And it's not so much patience. You saw on that run through that I did. Every 1-2 days there's a trade coming up, at most 5-6 days gap. So it's great. You quadruple your account, and you get to live your life and stay chilled. So it's a great way of doing trading. But of course, it only works if you can reasonably work out which way the market is going. And I say reasonably because you don't need 90% accuracy, 80% accuracy. I'm sorry to say, but anybody that claims they can forecast the market with 90% accuracy is just total BS. If I talk about myself, my average sort of accuracy rate is around 62%, and I've got this documented on my website, which I'll throw in on the description. You can have a quick look on what I've been doing in the past. And this is real life stuff that's documented. It's not, for example, I'm looking at it now retrospectively and I'm then pulling out these charts and just putting it on my website. You'd see those charts are actually live charts at the time, so I can't go back and change those. And technical analysis has a number of different tools that you can use to work these out. I personally use a combination of technical and fundamental analysis. I'm heavily weighted towards technical analysis, but I do use quite a bit of fundamental analysis in terms of what's happening in the markets, what sort of supply demand they might have, what speculating what the geopolitical landscape might look like for oil and so forth. So I do factor those in, and especially the economic indicators. So again, I'd be looking at things like core CPI, PPI, the oil inventories and things like that. To be honest, they don't really help so much in terms of working out the near-term movement of oil prices, but it's important to factor that in because it could suddenly influence your price movements. You saw in my analysis there was a couple of times I made losses because the price suddenly spiked up, which was unaccounted for. And again, that's because something on the fundamental side kind of popped up that caused that freak out. So this is what I'll do, guys. I'll select 5 random people who subscribe to my video and give me a nice thumbs up. And these 5 people, I will give you all my trades as and when I am doing them for the next 3 months. How's that? And what I want you to do is I want you to document your progress. I want to record things. I want you to use a spreadsheet that I've given you. I want you to communicate with it on a regular basis and show me what your progress is like. And of course, I'd like you to share that with everybody else, on the internet, whether it be on Twitter, whether it be on YouTube, whether it be on your Facebook accounts, whatever it is. I'd like you to share that and show them that, hey, look, there is a less riskier way of trading. There is a slightly slower way of trading. Hey, you can be profitable without going crazy. Do that every month. So every month I will select 5 random people who are watching, subscribing, and following my videos, and I'll give you all my trades. As for everybody else, again, I'd like everybody else to sort of stay in tune as well. I've got some plans to sort of give some kind of service in terms of where you can just copy all my trades. But to be honest, I'm not quite ready for that yet. So what I'll do is for everybody else, I will post all my trades just slightly after they've happened on my Twitter account. So, I'll put my Twitter account on the description, and please do follow. And every time I post my trades, you can have a quick look at it to see what I'm doing and follow those trades to see how they materialize, what actually happens to them. But do keep in mind, I don't encourage you to trade them on those trades because they will be delayed. So you're just going to gain on bad prices. Now, if you get it in a really bad entry, then your entry and your stop loss, whether it's a buy or a sell, then it's going to be pretty big, and you're just going to end up screwing up your account, and then you're going to blame me and say, hey, look, I was following your trades and so on. But no, you entered at the wrong prices. Yeah. And again, that's likewise when I close my trades, I post it on my Twitter account, so you guys can see when I'm actually closing trades and what's actually happened to them, whether they're profitable or not. And you'll see that real time. And again, when I'm closing trades, I'll post it literally as and when it happens. So yeah, follow me on Twitter. So that's it for this video. If there's anything else you'd like me to sort of share with you guys, anything you want me to discuss, anything you want me to prepare, feel free to drop me a quick comment. And if you found this video is useful, do give me a quick thumbs up, and I don't know what more call it, like, subscribe, feel free to do so. And hopefully we can help out a lot of people using these techniques and reduce the number of failures that are happening in this era of day trading and crazy stuff that's going on. So yeah, until next time, until the next video, which will be coming soon, trade safely and see you then.